Welcome. Today, we're breaking down a really powerful concept from ICT to help you pinpoint high-probability selling opportunities, just like the pros do.
So let's just start with a question that, let's be honest, every single trader asks themselves. How do you really know the perfect price to sell?
Well, here's the thing. The answer from the pros has nothing to do with luck or just, guessing. It's all about understanding the market structure and selling when the price is objectively expensive or at a premium. Okay, so first things first. What do we even mean when we say a market is in a premium? Let's define that. It sounds kind of fancy, but it's actually super straightforward. A premium market is just the price area that's above the halfway point of a recent trading range. It's the zone where pros start looking for sells. And here's the real key. Forget all those traditional overbought indicators. The price range itself tells you everything you need to know. But hold on. Before we can even think about selling at a premium, we have to define our playing field, right? We need to figure out what the current relevant trading range actually is. And mapping this out is a pretty simple three-step deal. First, you're going to spot a clear, strong directional move, what we call an impulse swing. Second, you just take your Fibonacci tool and anchor it from the high to the low of that swing. And bam, step 3, that 50% level is now your fair value point. That's your equilibrium. And here's exactly what that looks like on a chart. See that clean, obvious move down? That's our impulse swing. We anchor the fib from the top to the bottom, and there it is, that 50% line. That's our crucial dividing line between what's cheap and what's expensive. All right, so we've got our range, we've got our equilibrium line. Now for the fun part. How do we actually use this to find a high probability trade entry?
So as the price rallies back up and punches through that 50% equilibrium line, you are now officially in a premium market. This becomes your hunting ground. Your entire mindset has to flip here. You're not looking to buy anymore. Now, you're just patiently waiting for that perfect spot to sell.
But wait, it gets even more specific than that. ICT doesn't just say, oh, sell anywhere up here. No, he identifies a very specific sweet spot called the optimal trade entry, or OTE. This little zone falls right between the 62% and 79% retracement levels, and that is where the highest probability short entries often show up.
Okay, let's level up now. We're going to talk about an even more powerful setup that can happen inside this premium zone. And believe me, it's one that catches a lot of traders off guard.
So what happens when the price just screams right past that OTE sweet spot? What if it even runs above the old high, where everybody's stop losses are sitting? For a lot of folks, that's a failed trade. It's time to panic. But for a professional, this could be the real signal. And this right here, this is what's known as a turtle soup. It's a classic stop hunt. The market is basically engineered to run up, grab all that liquidity from the buy stop sitting above that old high, and then reverse, and reverse hard. See how it just pokes its head above that high and then gets slammed right back down? That's the setup. So, to put it all together, here's the deal. It's not just any stop run. First, price has to be in that premium zone, above the 50% line. Second, it has to run a clear, obvious old high. When you get that 1-2 punch, that creates an incredibly high probability short entry. And your target? Well, it's a logical spot, right back down below a previous swing low. Learning the charts and the patterns, that's one thing. But the real game changer here is the mindset shift. This is what truly separates the pros from everyone else in the long run. And ICT has this perfect, simple analogy for it. He says, if you own a car, do you want to sell it at a discount? No. You want to sell it at a premium. It's so simple, right? Of course you want top dollar. It's the exact same logic in the market. So the biggest thing to take away from this video is that you have to shift your perspective. I know it feels completely wrong at first. It can even be scary, but you have to train your brain to sell when things look the most bullish, the most overbought. That is selling at a premium. You are selling into the buying frenzy, not chasing the price after it's already started to fall. And there you have it. The goal is to stop guessing, to stop feeling your way through trades, and to start actually listening to what the market's own structure is telling you. So the next time you see price just ripping higher, don't get swept up in the hype. Ask yourself, wait a minute,
Is this my chance to sell at a premium?
Hey, if you found this video useful, do us a huge favor and hit that like button. And definitely subscribe to our channel for more explainers like this one. If you have any questions at all, drop them in the comments below, and a human representative will get back to you. Safe trading, everyone.